In this video, I'm going to be introducing market environment. Okay, so what is market environment? Now, when we talk about market environment and we say that you need to know your environment, when you're trading, you need to understand who is in control. Are the buyers in control or are the sellers in control? Many of you may have heard the phrase, it's a buyer's market or it's a seller's market. That is the market environment. Who's in control? Who holds the power? There are three different environments. All right, the first one is a bullish environment. So we have a bullish environment, and what that is going to look like within a bullish market, you're going to see the buyers are the ones in control. This is your uptrending market. This is the bullish environment. Now the second environment we have to talk about today is the bearish environment. Now this occurs within a downtrending market. Sellers are in control. It's a bearish market. And the third one we're going to talk about today is a consolidating environment. What this is going to look like is a consolidation zone, price stuck in a range, buyers and sellers fighting it out. Okay, so let's talk about the key characteristics here. In a bullish environment, a bullish market, we're going to see higher highs. These are the peaks, okay? We're going to see higher highs all throughout here and another one here. All right, so we're going to have higher highs. Price is going to be making new highs each time, trending to the upside in an uptrend. And along with the higher highs, we're also going to have higher lows. Another one here and another one there. So the market's trending in the upward direction. Buyers are clearly in control. The moves from the buyers are much larger than those of the sellers. The buyers are covering the most ground, and the sellers are very weak compared to the buyers. This is a buyer's market. Now in the bearish environment, it's quite the opposite. Price is trending to the downside. We're in a downtrend. The sellers are in control in a bearish environment. We have lower highs. We have lower highs across the board. Let me clone this one more time. Okay. So we got lower highs in a downtrending market. We're also going to have lower lows. So these valleys are going to be lower lows. It's very simple. I'll go ahead and label these for you. And we got one more for the example. Okay. Now, just like the bullish environment, it's going to be looked at as the same, except everything's going to be flipped. Okay. Now, in the bearish environment, these sellers are in control, pushing price down, digging deeper and deeper, and are much stronger than the buyers. So in this example, the sellers are in control of the market, okay? They hold much more strength, much more force. Their moves are much sharper and faster. The buyers are weak, and the sellers continue to take over in a falling market. This is a bearish environment. Now, the third environment we're going to talk about is called a consolidating environment. This is where the buyers and the sellers are constantly fighting it out, and there is no superior control from either one. They're each fighting and neither one is giving up. So in a consolidating market, price tends to normally be stuck between a support and a resistance zone. Okay, now up at the top here, this is where our sellers continue to come in over and over. Our peaks, our highs. The sellers want to keep selling the market from this area, but the buyers like buying down here at this area. They've got money to play with, and they want to push the market to the upside. So there's a lot of force coming off of this support zone through here, and likewise, let me move this up. From the resistance, the sellers also provide a lot of force back down to the support. Okay? And this is what occurs when buyers and sellers fight for control. If you have just as many buyers as you do sellers, and you have big players on each side, institutional investors, big banks, who are fighting for control of the market, this is how the market gets stuck in a consolidation zone. Big players are playing back and forth, and they all got orders to fill. And these huge orders these guys are placing are causing the market to bounce back and forth and be stuck in a consolidating zone until one of them gives up. Now, it's a little different from the other two. In a bearish environment, there's big sellers in the market and weak buyers. The big banks, the institutional investors, the hedge funds, they're selling. And there may be very few of those entities that are buying, which are pushing price back up so that the sellers can get a discounted rate on another entry to liquidate more money into the market. You can tell that there's a constant flow of orders being filled. Cody talked a little bit about this in the first trend line video. Now, along with these moves here, yes, you can use your trend lines for your trend identification on these moves. But in a consolidating market, the buyers and sellers are equally matched. And that's what causes price to fluctuate back and forth. You get the same size moves from the buyers and the sellers. They're equal. Okay, guys, this was just a quick introduction to market environment. And I just wanted to break down these three different ones that we're going to be looking at in the rest of this section. So in the up and coming videos, we're going to take a look at each one of these examples in the live market. Easton Harris here. In this video, we are going to determine what environment we are in. What market environment are we in right now, right here in front of the charts? Okay, so let's take a look at this. So I'm noticing that we seem to be making lower high. We have another lower high and another lower high. And price has also given us yet another lower high. Let me just label this really quick. So across the board, our peaks are all created as lower highs. Okay. All right. So we've got lower highs across the board. We also have lower lows. Lower low, another lower low, another lower low, and another. And even down there towards the bottom of the screen, another low. Okay, so let's label these really quick. Lower lows. Okay, so price just continues to make new lows. Now, if we look at price here and we look at the strength of the buyers and the sellers, okay, the sellers made a push down pretty strong. The buyers then pushed back in return very weak. Now, to determine the strength of the buyers and the sellers here, there's a couple things that we need to take note of. The first thing that we're going to look at is distance. Okay, so in comparison here, the sellers traveled a much greater distance than the buyers did. The sellers traveled 852 points, while the buyers traveled just over 400. So the sellers take the cake, and it is visually obvious when you compare them side by side here. But the second thing we're going to look at to determine strength is also speed. Now, this is the 4-hour chart on copper. Looking at this, we can see we have 1, 2, 3, 4, about 5, 6 candles to make this move happen from the sellers. Took about a day, okay? Now, the buyers within the market traveled not even half the distance, but took almost 2 days, double what it took the sellers to get twice the distance. Not only did the sellers travel twice the distance from A to B, they also did it twice as fast compared to the buyers from A to B. So it's safe to say within this move, the sellers are in control. Now let's look at the next move. Let's be fair. Let's be fair. Let's give these buyers a fighting chance here. The sellers travel from A to B in 2 candlesticks, 8 hours. In 8 hours, copper dropped 650 points in 8 hours. Now, the buyers, here we are with the buyers. That's their move in comparison. The buyers traveled just over 400 points. Not too bad compared to the sellers, but the buyers also took 24 hours compared to the sellers' 8 hours. The sellers are covering a much larger distance in half the time. All right, let's look at the next one. Sellers come in, push price all the way down to this area. I'm going to break this box apart just so we're not getting confused here. Sellers push the market down. How'd the buyers do? That was pathetic. The sellers are in control. The sellers are moving faster, larger distances. The moves are sharper. You can see the buyers struggle to get up here. It takes them longer. They're weaker. And when the stronger sellers come in, sharp moves to the downside. Again, buyers struggling. Another sharp move from the sellers to the downside. Buyers hardly move here. Another sharp move from the sellers again. Just in case you forgot, one last time. When determining which market environment we are currently in, at this time on this chart on copper, we can determine that we are indeed in a bearish environment. And just real quick, let's clear this up and give y'all one final look at it. All right, guys, this is a relatively easy concept. I wanted to break it down for everyone just in case people have a hard time understanding this. In the next video, we're going to look at another area in the market, and we're going to figure out what environment we stand in. In this video, we're going to be looking at identifying the market environment once again. Now, I've got corn pulled up here on the 1 hour, and we're going to take a look. Should be fairly simple, but let's identify what kind of market we're in. We've got a higher high here. So here's a higher high. We have another higher high here, and another one up here at the top of the screen. So we're making higher highs. We've also got some higher lows. So we've got one here in this area. We've got another in this area, and we're going to have one more right here. We have our highs and lows marked. We can tell by looking at the way price is moving that with every move, we get higher and higher. Now, if we look at the individual moves from the buyers and from the sellers, what can we see? There's the buyers, there's the sellers. Buyers look a lot stronger to me. There's the buyers, there's the sellers. Buyers seem to be in control. It's safe to say that the buyers are in control here. Now, I'm going to clear all this off. And I'm going to show you a trick. Look over here. All right, y'all see that? Look at it, look at it, look at it. Yes. Now look over here. All right, y'all see all of this? Pro tip. From this area, from right here to right here, did price go up or down? Let me give you a hint. That's one way to tell if you are in a bullish or bearish environment. Is price rising or falling? It's very simple, guys, very simple stuff. I was breaking it down really well, but just to let you guys know, if you just look to the left of the screen and compare to where price is at on the right side of the screen, you can pretty much tell who's in control. But it's important to know the higher highs, the higher lows, because all that's going to play an important role in some of the sections that are coming up. That's going to be it for this video, guys. Welcome, my name's Easton Harris, and today we are looking at the South African Rand compared to the Japanese Yen. Now, we're still on the topic of market environment, and in this video, we're going to be looking at a consolidation zone. Now, this area here looks super messy and all over the place, but you guys know how to mark up your zones. So we're going to mark these up, and we'll go from here. Okay, so let's look at this. First off, these moves are so messy, so sharp in either direction. Okay, just all over the place. Price is coming down, sharp moves up, sharp moves down, bounces, sharp move here, sharp move back down, sharp move down, sharp move up. I mean, price is moving very sporadic. It's all over the place, just back and forth, back and forth. We get back up here, price shoots right back down. So price is trapped within this consolidation zone between this support. I'll go ahead and label it for you guys. Between this support and resistance. All right, now buyers are coming in off of this support from everywhere on it. When price gets in here, it's flying up. But notice how price is not falling below this zone. It's not making any lower lows. All the lows here are pretty much the same. They all stop right here at this support. Now, similarly, the sellers keep selling off at the resistance. Strong moves coming out of that resistance, but there are no higher highs being created. They're all in the same vicinity. All the moves are sharp from the buyers and the sellers. We're not getting any higher. We're not getting any lower. And this occurs when you have strong buyers and strong sellers, okay? When this kind of liquidity hits the market in both directions, price becomes trapped because the seller is no stronger than the buyer and vice versa. Price can only fluctuate in the boundaries in which each participant allows it to. If the sellers were to give up at this resistance, if they would stop adding more liquidity to the market would in turn breach this resistance, move freely to the upside. Now it's likewise for the support. Price would be able to move freely through this support. Once all the orders are filled, once all the liquidity is gone. Now what you guys got to understand, when there's a lot of liquidity in the market, when there's a lot of participants, and it happens for the majority of the time on most common currency pairs, Euro USD, for instance. Euro USD is the most commonly traded pair within the Forex market, especially for retail traders. Euro USD likes to get caught up in consolidations quite a bit, more often than most pairs. I had to really search for this consolidation zone here on the South African Rand. Okay, that's why a lot of professional traders will actually stay away from those pairs that are commonly traded by retail traders, because they will cause price to get caught like this. All right, guys, and just the final pro tip here. Look over here. See where you're at? Look over here. You didn't get anywhere. You are literally in the same spot, and that's consolidation.
Environment video. In this video, I'm going to be using an analogy to explain to you guys how you should be analyzing price action on your chart and understand who's in control of the market, the buyers, the sellers, the bulls, or the bears. Okay, so we're just going to take this chart in front of us here. I've got UJ pulled up on the 15-minute, and we're just going to look at the left. We're going to start left and work our way to the right. So coming into the market, you guys can see sellers are in control right now. Okay, we are in a downtrend. Now we have this big move that comes down, okay, and then I want you guys to imagine that these sellers here, this is our runner, okay, so this is our marathon runner, and these are our sellers, okay. So I'm going to use this analogy to kind of explain to you guys when our marathon runner is running out of steam and when our buyers should be looking to take over. So we're coming down hard, right? Our runner is making new lows, okay? Now we get down to this area and our runner takes a break. He's resting. So we get back here, our runner has rested, and then he comes back into the market, okay? Runs, doesn't make a new low, and then he rests again, okay? How much would you guys say, percentage-wise, did he rest this time versus last time? About the same percent, right? So between this move and a rest, this move and a rest, it's about the same percentage, okay? Now, our runner gets his energy back, runs again, doesn't quite make a new low yet, but he rests, and this time he doesn't need as much rest before he comes back in and starts his run again. And he now takes out new lows, he runs a farther distance, and down he goes, okay? So would you guys say throughout this entire time that our runner has been healthy? He's had the stamina he needs to continue to run, right? Now, he gets down here and he rests again, and again, what percentage would you guys say that our runner rested? Okay, probably about the same percentage that he's been resting this entire time. And then he comes in, he's running, our runner is good. He gets down to this area, he rests again, very small percentage of rest compared to the run he just made. So I mean, our marathon runner has not had any issues with stamina, right? He's resting for just a little bit, and then he's continuing to run, continuing to make new lows, continuing to have the strength to push the market. Then he makes a long short down here, and he rests again. Now, this is a short rest. He then runs down, and then immediately gets whipsawed back up, and this time he rests what percentage? Would you guys say that our runner rested more than he's ever rested before? Yeah, right? This is over 100% of a retracement from his last run. He's running out of steam, guys. He's no longer has the stamina to make new lows. So then we see our runner run down again, and this time he's not able to make a lower low like he has been in the past. And then we see again that our runner rests over 100% of his previous run. Okay, so our runner has now officially run out of stamina, he's run out of energy, and we can expect that he will not be running any more. He won't be running any longer. This is his final distance. Okay, he's tired, he's done with his run, he has no more strength. And guys, in the same way that our runner has run out of strength, our sellers have ran out of strength. The buyers are now here in the market. Sellers are unable to push price lower. Buyers are continuing to push them up higher and higher, and you can see the change in the strength the change in control. And from here on out, you guys can see the market was bullish, and our bullish marathon runner, okay, you guys can see, follow him up. He has strength the entire time until, boom, he does 100% rest from his previous run. You guys see this, right? He tries to make another run, boom, he has no more energy, guys. Another run, boom, no more energy, no higher high. Guys, sellers are in control. It literally works this way every single time, guys. Look, sellers are in control. They're making new lows. Our marathon runner is running. They're running. They're running. And then you get 100%, more than 100%, right? This guy rested twice as long than he ran. He has no more energy to run and make new lows, no more strength. Buyers are now in control, making new highs. This is how you can approach the market, right? A nice analogy to approach the market, understand the market environment.